Friends, let us now understand cash flow statement for evaluating inherent strengths of a business. We have discussed P&L, we have discussed balance sheet, and now we are discussing the cash flow statement. All of us by experience know it that cash flow statement is the most important statement among all the three because cash flow statements gives an idea about the long-term sustainability, long-term viability of and the ability of a business to take care of its long-term and short-term obligations. Let us understand cash flow in the same way as we have done. So this is the complete cash flow statement of a company. These are the real numbers, and as we have taken the real number for P&L, we have also, and the balance sheet, we have taken the real number even for the cash flow statement also. I've just changed the name of the entity just to hide their entity per se. So cash flow statement, I'm sure by now you would have understood the cash flow statement will have three components, right? Three type of cash flows. So the first is cash flow from the operating activities. Cash flow from the operating activities. Now, as I said, the cash flow from the operating activities will comprise of two component. That is, one is profit and second is changes in working capital. Let us look at them. At the second component, as we know, cash flow from the investing activities, and the third is cash flow from the financing activities. So let us begin with the cash flow from operating activities. So you can see here, so you have profit coming here, then you add the depreciation, and then you add the finance cost also. A question will come to your mind, and it must come to your mind, why are we adding the finance cost here to the cash flow from the operating activities? And the reason behind is very simple. Finance cost, remember, is not the finance is not an operating expense. Finance cost is the finance cost, or the interest is a financing cost. Now, since finance is a financing cost, it belongs to the cash flow from the financing activities and not from the cash flow from the operating activities. While calculating the figure of profit after tax, what we did, we deducted all the expenses, including the finance cost. So since we deducted the finance cost, and now that we know that finance cost is not operating expense, and here we are trying to find out the cash flow from the operating activities, and therefore what we do, we add it here. So हम क्या करते हैं? What we do here, we add the finance cost here, and we deduct this finance cost later on when we come to the cash flow from the financing activities. What we have also done is we have taken the changes in the current assets, all the current assets, and then we have taken changes in the current liabilities, all the current liabilities, right? Remember, all the current liabilities, all the operating current liabilities, all the operating current assets. So if there is an investment in the securities, even though it is current investment, even though it is current asset, it will not be part of your cash flow from the operating activities. It will be part of cash flow from the investing activities, because investment in securities is not an operating asset, right? So that is how it will happen. So we have taken all the current assets, and we have taken all the current liabilities, and you can see this is the cash accrual, number one, from the operations, and number two, we have taken the total of the current changes in the current assets, and we have taken the total of the changes in the current liabilities. The net effect is net change in the current assets and liabilities, that is coming here. So total of 51,810 and minus 1688 put together is 50,122, and this 50,122 is the amount of cash flow from the operating activities. So this is the first part of your cash flow statement. Now we go to the next part of the cash flow statement, and that is cash flow from the investing activities. So here what we have done, we have taken all the non-current assets. Please remember, current assets you have taken as part of the operating cash flow. Now you are taking the cash flow from the investing activities. You are trying to find out this company has got how much money invested into the new assets, which means outflow. And in case if the company has sold any asset, that is your inflow. So you take all the assets and you come to a figure of 13,801, which is minus. And that means what? That means this company has got an outflow, not inflow, outflow of cash on account of investing activities, and that is minus 13,802. Then we come to the last part of the cash flow statement, and what we calculate in the last part of the cash flow statement is the cash flow from the financing activities. And as I had explained to you earlier, what is the meaning of cash flow from the financing activities? The meaning of cash flow from the financing activities means that as a business we have to grow, and for growing we have to make investment. For making investment we need money. Where will the money come from? Firstly, the money will come from our own operations, and that money is not going to be enough because our expansion programs are big and our cash accruals are less, and therefore we need to get money from outside. So when we get money from outside, it can come from the shareholders or it can come from the lenders. Either way, when the money is coming from the lenders or from the shareholders, it will be part of the cash flow from the financing activities. Now in this case, of course, there is no fresh issue of share capital, there is no fresh issue of preference share either, and there is no share premium as well. So therefore it's all 0 here, and so there is no cash flow under the group cash flow from the finance activities on account of equity related instruments. On account of debt related, again you take your long-term borrowing, deferred tax, other long-term liabilities, long-term provisions, and the finance cost. Now you can see here this 9,123 we have added earlier here as the cash flow for finding out the cash flow from the operating activities. We have added it back, and now we are deducting it here because this cash finance cost is the cash flow on account of financing activity and not on account of the operating activity, and that is what we have done. So this is the total of cash flow from the financing activities. Here it is coming minus 11,581, and that means what? That means this company has more outflow on account of the financing activities. Now what you do, friends, this figure you will take opening balance of cash and cash equivalent from your balance sheet. We will see as to how will that happen, and then you will take the total of net changes in the cash flow. That means you will take the total of the cash flow from the operating activities, cash flow from the investing activities, and cash flow from the financing activities. You put all of them together and then you come to a figure of 24,739. So that is the net changes. So you take the opening balance plus the net changes and take this total, and this total is coming to 49,126, which is the closing balance of cash and cash equivalent. Now how to figure it out whether the cash flow statement that you have prepared is right or not right? And that is because you will look at this figure of the closing cash and cash equivalent. If this figure is matching with the cash and cash equivalent figure in your balance sheet, that means you have prepared your cash flow statement correctly. I will also now discuss with you and share with you as to how to prepare the cash flow statement for your business step by step. But this is to understand with you the entire cash flow statement step by step, and as to what will appear in different segments of the cash flow statement, that is cash flow from the operating activities, cash flow from the financing activities, and cash flow from the investing activities. Now before we go to the next topic and do a small case study and prepare the cash flow statement, Shivam, I can take 2-3 questions and then we will go to the preparation of the cash flow statement as to how to prepare a cash flow statement in real life.